Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, January 5th, 2021. Great to be with you guys this morning. Hey, Jay, Ted, great to see everyone in the room. So we went over great detail yesterday in the webinar on daily effects on the setups I'm tracking. We're still basically in the same zones. So we'll go over DXY, Euro, Sterling, Dollar CAD, Gold, and SPX are sort of where I've been focused on as we open up the month and the week and the year here. Again, a quick reminder to everyone in the room, good time to kind of really stay nimble. We have a lot of stretch trades. I don't know if you guys saw, I'm sure you did, Jamie's piece yesterday, really compelling evidence, right? With the 50-week close lows that we saw and the 50-week close highs that we saw in Kiwi, Aussie, Sterling, the lows in dollar, yen, CAD, all real stretched right into the start of the month at key levels. So let's take a dive right in. Here's DXY. Again, we looked at this yesterday, but I just wanted to highlight it's really a messy trade from the broader scheme of things as we open up the year. So the 88.6 at 89.93, that's the level we closed out last year holding support. We haven't marked a weekly close below this yet. So as I said yesterday in the webinar, the onus is on a weekly close sub 89.93 to continue the downside sort of pressure that we're seeing on the dollar. Again, the daily chart, nothing to write home about here, right? Now, the ideal scenario on such a stretch is that we are looking for the downside exhaustion trade, right? So a basing, a low. There's not enough evidence, in my opinion, here as it pertains to dollar index to do anything yet. So kind of still on the sidelines. We can go ahead and scratch these channel lines, just looking for some sort of basing hit here. Again, the majors are way cleaner than the actual index is, but here's the near-term levels we've been following on DXY. Real tight weekly opening range, right below, slope resistance, channel resistance off the November high. Look for a break of this near-term consolidation. Ultimately, if we breach last week's high, 90.40, you're looking for 91.30 and 91.45. But I'm going to need some sort of near-term breakout before we start to fight this. So where are the executable trades? If DXY is kind of meandering, not much clarity, well, we're coming on board, I think, close to where we need to start operating on the euro. Here's what it looked like last night. So real quick, I showed you guys this chart yesterday on the weekly chart. You still got that 88.6 at 23.36 is sort of the convergence point where you have not only slope, but also that relationship from the 2018 decline. The divergence is still something that we're watching as well. On the daily chart, okay, it's even more apparent. And I showed you guys this yesterday as well. So this is what really has me interested right here. Okay, you're pushing up against uptrend resistance. You have basic channel support holding this ridiculous support level, and we're simply looking for the break. Now, we do have a lot of event risk happening. We got the Georgia runoff elections here in the US today, which will certainly have larger implications for the political scope here in the US, but you also have FOMC minutes coming out, you have non-farm payrolls on Friday, you have CAD employment, right? All this is going on with more Brexit breakdown, or more UK lockdowns and the whole COVID thing in the background. My point being, you can envision a scenario where we're early in the month, you breach to get like a final stretch. High week close comes in at 24.09 before the pullback. But ultimately, the idea is to look for that topside blow off, that exhaustion. Here's what it looks like on the near term. No change to any of the levels, right on point. We're still looking at the 4-hour charts here because of just really contracted time price action. Those look pretty clean. 2020 close came in at 22.15. That converges on channel support. Ultimately, 21.45 is the break that'll give us back on the sort of corrective stance. But for now, we're just waiting for that signal. We're just waiting for that exhaustion blow off. So any questions on DXY or Euro? There's not really much to update you on from yesterday. We're right back, we're right in the same stance. Sterling, interesting setup here. Yesterday, as I noted in the update, Sterling has posted an outside day reversal off the highs. Okay, so here's Sterling on the weekly charts. Again, we looked at this yesterday as well. 36.75, the Brexit gap into 36.21. key zone, major pivots in price on a closed basis from a weekly standpoint. Look what we just did. Okay, so sterling's at resistance. Doesn't mean it's going to hold, but it certainly means that near term, we're looking for the reaction. Here's what it looks like on the daily chart. Yesterday marked an outside daily reversal off fresh multi-year highs. Okay, so typically in and of itself, an exhaustion print, typically a blow-off type of exhaustion read. Not only that, but you have ongoing momentum divergence, price action with a higher high, the oscillator with a lower high, momentum trigger that gave out back here in November or early December rather, now holding resistance, and you have slope. This is a parallel of the same pitchfork extended off the high. So any way you slice it, it's a good spot. It's a good spot to look for it. Add to that, guys, that last week's close validated a 50-week closing high on building divergence. Typically, again, a bearish development. Sterling on the intraday looks like this. Now, as I noted, I have no idea, okay, absolutely no idea if this slope is in play. But the point being is if it is in play, near-term resistance, further highlighted by that same resistance zone, okay? We have a little bit tighter here on the intraday charts, guys, as far as the 2017 highs. It gives you 36.58 to 36.75. Nice resistance zone here. That's what we're looking at right here. Anything should hold on in recoveries if this is going to head lower, okay? Near-term support, the first lateral level, again, is going to be the 35 handle, but just ahead of that, you have that slope here, like 35.30s. So both levels, if we get through this, looking to validate a larger turn in sterling, okay? The Brexit news is going to continue to drip. The lockdown news is, I mean, I don't really think that's news, but that's going to continue to drip as well and weigh. We're focused on price. Irrespective of everything else, we're focused on price, and the exhaustion signals there in momentum, in the fact that we marked an outside day reversal yesterday off of fresh 50-week high close. That's something to pay attention to. Questions? On sterling. All right, so dollar CAD is the one that we'll be tracking very closely. Close of the week. Obviously, yesterday we had a massive outside candle. It wasn't a reversal candle per se, because Friday's candle, or Thursday, I should say, into the close of the year, did end up being an up day. So it wasn't an outside reversal. It was an outside candle though, meaning the next day took out the previous day's lows and closed above the previous day's highs. So again, that exhaustion here in dollar CAD, which is yet another pair that has seen a 50-week closing low. So all of these sort of themes, these technical features of markets stretching into real profound regions happening at the same time. So what else do I want to show you here? So here's the intraday, and here's what it looked like last night. We had just made that stretch, right? Look for near-term support along the median line, 26.95 max. I don't want to see anything below that. Breach above that 27.82 level, and you're looking for the upper parallel, 28.84 is that level that we've been focused on for a couple of weeks now. So that held last night right at 27.82. You got the pullback, holding slope support here. Let's see how this materializes today. Again, I don't want to see weakness beyond 26.95 if this is going to work. Top side, look for a break of that slope to give you that run on 28.84. We'll reassess there. Way too early to get aggressive on these trades, guys, but the initial inclinations, the first touch, look good. Okay. Questions? I know we're long on this on the swing side already, so I don't want to talk too much about it, but questions on dollar CAD? Okay, well, that is number 4. We're burning through these today. Gold, what do I have written down on gold? Right. So listen, here, this is big. So the breakout in gold, right? It's legit in my opinion. Okay, that's all based on the 1909 pop, and we need to see a weekly close above it. Granted, it's only Tuesday, but I think it would take something really special to see this sink sub 1909 on a closed basis again. It's one of those trades where it's almost too clean for comfort. You know what I mean? I mean, the break above 1909, this was big resistance. In fact, off the reversal here, these were the two levels that we were looking for as targets on the rebound, 1849 and 1909 into 1895, which is the 2011 high week close. We closed 2020 right there. In fact, the last 3 weeks of 2020 found resistance right there. Here's the pop. All things held constant, you're still looking for that stretch into 1956, a basic 618 retracement, a decline off the yearly high. It's also going to be the highs that you marked back here in November. So on whole, from 1,000 feet up on the gold trade, man, looks like a pretty clean, easily identifiable, easily recognizable breakout. Here's gold on the intraday. Let me show you the daily first. So again, 1909, well, that was right here, the 1909 breach out. On the intraday charts, what we've been following is this 100 off the low. So if this was going to be a corrective stance, and it's just within the confines of the downtrend off the August highs, then that 100 should have been the max, 1930. Not only did we break through that yesterday, we rallied and accelerated and closed above. That is a confirmed breakout. Keeps the focus looking at that 1956 level. Okay. Near-term support, we're going to go ahead and choke that up right to the monthly open. Right here. Monthly open comes in at 1898, so essentially the 1900 level. And beyond here, we'd have to reassess. You'd look for slope. You'd look for the 786 retracements, a bit higher from where we are. Slope would take you about 1970s, 2000, 2008 would be the 786 retracement. But all right now determinant on what we do here into 1956 if reached. Also noting something on daily momentum, and specifically in gold, the momentum oscillator as it pertains to the daily chart has always, I shouldn't say always, has tended to be rather fruitful. Okay. Here, again, don't take my word for anything. Here's how it looks on the break above 70. Massive ripperoo, right into the close of 2019 into 2020. Here's a break above 70. Massive rip for another 7 days to fresh yearly highs. Here's the last rip above 70. Massive ripper, obviously. This is post-COVID stuff. If this closes and pops 70, we're at that 1956 level. We're at the highs from November. A breach through here and a close above 70. Well, logic only dictates you look for this kind of price action. You look for this kind of price action. You look for this kind of price action. So the threat is certainly there for a sustained continued breakout higher. It's all determined on 1956 in my humble opinion. I'm looking for reaction there. If we're going to get the initial kickback, that would be the spot to look for. Again, initial support right back at 1920, this zone here, and then bullish inval at the monthly open. So man, gold, it's just super clean. If you're not already on the long side, you're chasing from here in my humble opinion. Looking for reaction in 1956. Here's what it looks like on the intraday chart. Even the advance is holding a pretty decent ascending channel within the confines of the pitchfork. Near term, 1956, just higher. You have confluence slope resistance near 1975. It's the 70s level I was telling you on the daily chart. That's essentially where we'd be looking for secondary stretch here if we breach this high. Questions? Again, weekly open, monthly open, yearly open, okay, is going to be our near-term bullish inval, and that's right here. Questions on the gold trade? Something that's going to be very evident I think over the next couple of days, we'll be watching this trade extremely closely, especially with all the event risk, right? Whether it's the elections, whether it's non-farm payrolls, whether it's the COVID count, well, whatever it is. Watch this closely. Now, I want to take a quick segue. I don't want to necessarily shift anyone's, I don't want to draw anyone's attention somewhere they shouldn't be looking, but I just want to touch base real quick on the Bitcoin trade, because guys, the more and more questions I get on this, the more concerning I get that people are going to get caught on this. So you see today, for example, I was just watching on CNBC, there's projections for Bitcoin at 125,000. Why? Because Bitcoin is going to receive, quote unquote, the same type of fan favor that gold is seeing. I just don't necessarily see that per se yet. Very might well be. I understand the argument that Bitcoin, is becoming more of a store of wealth. People are starting to use it as sort of a hedge against inflationary pressures and diversification to non-riskier assets, just as you would gold. The breakout here was phenomenal, right? I was talking yesterday in the webinar about the timing of this breakout right after Christmas dinner. Everyone's talking about, oh man, Bitcoin ripped this year. I want to do that next year. New year happens. Everyone's around the table. All of a sudden, we're at fresh, record highs, and this thing is showing, $1,000 swings in one day. Let it simmer. Let it get the noise out. I think we're going to be in this, literally this like 100 pip range, 1,000 pip range for probably another couple of days before it makes its next move. There's just too much pent up demand, too much interest, and too much radical calls for me to just be comfortable sort of taking a position from here. Now, again, if you're long from anything sub 25,000, I think my humble opinion, not a trade recommendation, just go break even and kind of hang on. But for new exposure from here, guys, it's just a gamble. Just don't do it. Just don't do it. Okay, so that's all I wanted. I just wanted to put a piece there, especially with gold like ripping the way that it has. I think it's prudent kind of keep an eye on what's going on there at Bitcoin. Last but not least, SPX. What a move, man. I hope you guys were in the webinar yesterday. I showed you this pitchfork. Unbelievable that it has continued to pay dividends. So yesterday we were saying watch for resistance right at the upper parallel. I even noted the scenario of a raised ceiling as this was rallying and really just pulling back from oversold condition right into the open of US trade. It plummeted. Look where it found support. I didn't even move these markers. These are exact same markers we put in yesterday. So it literally went from slope resistance right through the median line, accelerated move into the lower parallel. That's where we are now. Was that a signal of a larger turn? Well, we noted that among some of the pairs that have made major 50-week closing lows or 50-week closing highs, Dow Jones Industrial Average did it yesterday, or last week rather, on building divergence. The SPX has been rallying into these record highs on building divergence. Lower high, lower high, lower high, higher high, higher high, higher high. So again, if you start calling and, I've had discussion, again, I talk with guys on desks all the time around New York, guys, various brokerages, whether it's FX and they'll say, well, it's just a pullback. Every time we've gone one of these, fading it, it's the right play. You know what I mean? And that only lasts so long. I don't want to be Dr. Doom and Gloom, but we've been mounting divergence for months. We're at record highs. There's tons of event risk. There's uncertainty. And certainly if the Georgia runoffs today, guys, go left, the implications for just policy in general are pretty big. Pretty big. I think most of the time, most of this since the election, the market has sort of been pricing in sort of stalemate, Biden victory, divided Congress, okay, status quo, not much will move. But you get this shift where all the power goes into one side. I think the markets may start to react a little bit more negatively on account of just that uncertainty. So look, we're not playing politics. Whatever happens, happens. But what I'm saying is the turn that we see in SPX is important. It's significant. And it happened at a time that matters, both on the side where it turned off of the upper parallel The fact that it was the first day of the month, first day of the week, first day of the year. And then we have all that event risk on tap. Be careful here. Be careful. If we break this slope support, guys, it's going to be the first time we've broken this slope support since November 12th. You guys want to convince me that that's a buy? That's going to be a tough sell. Okay. Questions on SPX? All right, well, guys, I ran through this today. That's all I got. There's really not much new from yesterday. We went through all the pairs yesterday on Daily FX. I'm sure I saw all of you there. Just a quick note on Aussie, no change at all. Same levels we're looking at, that type consolidation right under resistance. Same thing on Kiwi. Still looking for some clarity there. But with all these trades, guys, setting up these really clear weekly opening ranges at key resistance or key support at 50-week highs or lows, these are the fruitful setups that we pray for. So stay nimble. If you're not in anything, right now, don't bug out. There's still a lot of opportunity on the way. Markets are just getting poised to start off this year. We have a lot of event risk on tap this week, guys. So stay poised, stay awake, and keep tracking these setups. We'll keep you updated as much as we can. If there's nothing else, I'll go ahead and wrap it up here, guys. We'll be back on Thursday. Hopefully we get a kick. Watch this election stuff tonight. Don't get excited. And like I said, I don't want anyone to start jumping into positions. I know that Jamie's putting out some positions right now and he's looking at these turns. I'm loving it. Just stay nimble until we get some clarity here. Once we do, I think we get some runaway markets this month. So best of luck trading. Again, Happy New Year to everyone in the room. First time we have this webinar this year. Best of luck. Blessings. I will see you guys on Thursday.